Welcome to my YouTube channel. My name is Tabitha. If you're new to this channel, please subscribe for more videos. We are going to talk about withdrawing RRSP fund for down payment. So a lot of people before they have been using RRSP because it gives you two advantages. So you can save on your taxes when you contribute to your RSP, because the RSP money is treated as not tax when it's contributed to RSP. So it's tax deferred, so you are given back your tax. But when you want to withdraw money from your RSP for down payment, so there are rules that you have to meet so you don't have to pay taxes. So RSP is one of the account that people save for down payment. They have a new one that is also called first time home buyer saving account. So that one is new and many people are trying to use it now because it can also give them the opportunity to save on their taxes. So here we are going to talk about RSP fund withdrawal for down payment. So if you're new to this channel, again, please subscribe for more videos and I will appreciate your support. So for you to qualify for home first time home buyers plan, you have to meet certain requirement. But what is this first time home buyers plan? So this plan allows you to withdraw money from your RSP up to 35,000 tax-free to use for down payment. As long as you meet the requirement, you are not supposed to pay any tax on that amount that you withdraw from your RSP. So that's defined the first time home buyers plan. But what are these requirements? Do you actually qualify for this kind of programs and you can get the money out of RSP account and pay for down payment? Do you qualify it? So for someone to qualify for this RSP, you have to have the money you borrow from this account has to have been to your account for 90 days prior to your withdrawal. It has to be 3 months, at least 3 months in your account before you withdraw it. You have entered. The second requirement is that it has to show that you have entered a written agreement to buy or build a qualified house. So you have to have that agreement. Otherwise, the money you withdraw could be taxed. So you have to meet all the requirements. So let's look at more of the requirement for you to qualify for first time home buyers plan. So what are more of these requirements? So if you buy this house, you have to have the intention to live in the house within 1 year of purchase as your primary resident. It's not for business. It's not for anything. If you want to risk it, you can maybe use it for business. But if you use the house, you buy a house with the RSP money, you have to have that intention of living in it for 1 year. Maybe later on you can sell it to your business and buy it for business, but at least after 1 year. Otherwise, you get into problem with CRA people. Okay. What are other requirements for you to qualify for first-time home buyers plan? However, some of them. So most of the time before, if you had used the first-time home buyers plan before you use it again, you have to have no outstanding balance due. Otherwise, you will be charged taxes if you use it again when you have outstanding balances from your previous use of your RSP. You must withdraw from RSP within 30 days of taking a title of the house. That is requirement number 6. So let's look at more requirement that may prevent you from qualifying for a first-time home buyers, or it will qualify you to buy a house under RRSP program. Number 7, must be a Canadian resident. So any visitor to Canada, someone who has not yet got the residency, must not use the qualifying, must not use the RRSP for down payments. Okay, so you and your spouse can withdraw up to maximum of 75,000 as long as your spouse also meet the requirement. So you don't have to just take the money and then later on find out, okay, your spouse is not a Canadian resident. You find out that your spouse had used the money, the program before and still have some outstanding balance, or maybe your spouse, like all those requirements, maybe they have to meet the requirement. Him or he or she has to meet the requirement for them to withdraw the money without paying taxes. So we have more of the information on RSP withdrawals. So what are some of this more information about RSP withdrawal? What do we still need to know and why we should know it to prevent us from paying for it? If you miss any rule, maybe you have to pay for it. So repayment is over 15 years. So you have given 15 years to repay back the money that you borrowed from your RSP. The money is still yours. You can still use it for other things, but the program requires you to pay it back 15 years, starting 2 years later. So after 2 years, you have been given time to breathe, put your things back together, and then you can now start repaying. Any payment means are added to your taxable income. This means that if you're scheduled to pay 1,500 a year and you did not pay that because of some other reasons, so that amount will be added to your taxable income for your previous year. So if you made 50,000, you will have 51,500. So if you made 65,000, the 1,500 will be added onto your taxable income. This also includes the differences in the partials payment. So if you had paid half of that, and then they will just take the half and add it to your taxable income. So more information on RSP, we are still on this. And what more do we need to know so we can avoid problems and see how we really use the RSP the better way and not get in trouble with the CRA. For you to withdraw money from your RSP, you need to fill the form T1036 form. So once you fill that, and then you can now get the money the right way. Another thing too, you need to know like how much will you want to pay a month, in a year, annually, how much do you want to pay? Sometimes people don't want to calculate. So you can just look it at your CRA account and then you see on your statement that, oh, this is the how much you have to pay and this is the total amount that you owe by this time. So more information on RSP withdrawal. So what are some of the more things that we need to know before we put ourselves into trouble? So if you are couples, you can so if you have multiple RSP account, as long as you don't exceed 35,000, so you can withdraw money from those accounts. So maybe you say you have one account with your employer, you also have another account with a different bank, you have another account with different banks. So you can withdraw money from those multiple accounts as long as you are not going over your limit. Minimum payment equal to 1/15th of the amount borrowed. So you make your calculation, you can really actually know how much you can pay. Or you can take the previous approach and then you check it on CRA and see how much is due for you in a year, so you can avoid paying more taxes. Because if you don't pay, if you miss your payment for the year, that amount would be added back to your taxable income. and then that could take you to a different tax bracket if you're not careful. Maybe you are like $50 away from another bracket, but once you didn't pay 1,500, the one that was supposed to go to back to your RSP, that amount will take you back to the higher tax bracket. So be careful, pay your minimum, take your time. It's not much. If it's 1,500, you can divide it throughout the month of the year, and then you will be good to go. So if you like the video, please subscribe for more videos, and I will see you next time.